So what if I told you there's a kind of treasure map for the stock market? Well, that's pretty much what value investing is all about. It's not some complicated, dry financial strategy. It's a way to find absolutely amazing deals in places most people aren't even looking.
So think about this for a second. What do the savviest bargain shoppers and, the world's greatest investors actually have in common? It all comes down to one simple thing. They look for quality that's on sale. They've learned to ignore the hype and instead focus on one thing, paying less for something that's actually worth a whole lot more. That one idea, that's the heart of everything we're going to talk about today.
Okay, so first up, let's talk about the core idea, which honestly is as simple as it sounds, buying stocks on sale. But don't let that simplicity fool you, because this idea is the engine behind some of the greatest fortunes ever made.
At its very core, value investing is just a strategy for buying pieces of a company, stocks, for less than they're really worth. The market slaps a price tag on a company every single day. But a value investor, they do their own homework to figure out its true value. And the gap between those two numbers, that's where the entire game is played.
And this slide just lays out that critical difference perfectly. On one side, you've got the market price. That's simply what you pay. It goes up and down based on feelings, news, and a whole lot of hype. But on the other side, you've got the intrinsic value. That is what you actually get. It's the real underlying worth of the business, figured out by looking at its assets, its profits, its debt, the real stuff. A value investor lives to take advantage of the difference between those two.
And look, this isn't some new fad. The playbook for this was literally written decades ago by pioneers like Benjamin Graham and David Dodd, and then it was perfected by absolute legends like Warren Buffett and Charlie Munger. I mean, these are the giants of the investing world, and this philosophy is the bedrock of all their success.
All right, next up, let's open up the Value Investor's Toolkit. Because this isn't about guesswork or luck, it's about having the right tools and, honestly, more importantly, having the right mindset for the job. The most important tool isn't a spreadsheet or a calculator. It's your philosophy. A true value investor learns to tune out the market's daily noise, all the chatter, the panic, the hype. Instead, every single decision is grounded in cool, rational analysis of the business itself. You act like you're buying the entire company, not just a little piece of paper. And that mindset is built on 4 solid pillars. Think of these as the non-negotiable rules of the game. They give you a framework for every single decision you make. So, here they are. Step 1, you do the homework to figure out what a company is actually worth. Step 2, you always demand a discount, a big one. We'll get to that. Third, you got to be patient. We're talking years here, not days or weeks. And finally, you stay laser-focused on the health of the business, not the mood of the market. Okay, this brings us to what is maybe the single most important concept in this entire strategy. The margin of safety. This is your safety net. It's that built-in discount that not only creates your potential for profit, but it also gives you a huge buffer just in case you're wrong about something. To put it simply, it's the seatbelt of value investing.
So we've seen the what and the how, but the really big question is, why does this contrarian approach actually work so well over time? Let's break down exactly why this method wins in the long run.
This chart just shows it all so clearly. See that lower bar? That's your purchase price, nice and low. And that higher bar is the company's real calculated value. Now that huge gap between them, that's everything. It's your margin of safety, which means you have less risk, but it's also your potential reward, which is what you stand to gain when the market finally catches on. You're basically tilting the odds in your favor right from the start.
And the advantages just keep stacking up from there. Because markets are so often driven by emotion, you can literally profit from other people's fear and greed. And this isn't just a theory, it has a proven track record of beating the broader market over decades. By holding on for the long term, you unleash the incredible power of compounding. And all that deep analysis, it often leads you to find these amazing hidden gems that the rest of the market has totally ignored.
At the end of the day, this whole philosophy can really be boiled down to this one idea. Value investing is anchored in rigorous financial analysis, patience, and a disciplined approach to finding market bargains. See, it's not about being a genius, it's about being disciplined. That's the whole strategy in a nutshell. And that leaves us with the central question that sits at the heart of value investing. What really drives the market day to day? Is it cold, hard, rational analysis? Or is it the very human roller coaster of fear and greed? The value investor makes one single powerful bet, that over the long haul, rational analysis will win. And that all that emotion, well, that's what creates the opportunity in the first place.